Good morning, everybody. Hey, it is what is it? Wednesday, the 11th of February. Hope you're doing well. We got payroll numbers coming out, and we'll see what those look like when Dave joins us here in just a second. We got Ford, we got a couple other companies reporting. We've got those on the agenda to talk about as well. So looking forward to it. Hang tight. We've got Dave coming up next with us.
It's 8:41 here. 19 before 9. We're at 56 degrees now in Sebring. Yeah, that's still a little bit cool, but we're going to get up to normal for this time of the year, mid to upper 70s a little bit later on today. So enjoy the normal weather, all right?
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Do that, please, and use the information we give you here every morning as to what's going on Wall Street with the good auspices of Philip Statler from Statler Financial Services in downtown Sebring on the telephone. Philip, good morning. It's good to hear your voice this morning.
Good morning, Dave. Doing well, enjoying the little warmer weather this morning. So, the markets, so I will say, Dave, I don't know, they still seem a little cold, don't they?
In a little bit. Yesterday, the blue chips went up. Dow was up to another record, up 52 points yesterday. So we're starting the day up at 50,188 on the Dow. Standard & Poor's off by about 0.33% yesterday, and the NASDAQ was down a little more than 0.5%. I'm looking at those combined with the Russell being off by about 0.33% yesterday. I'm kind of thinking that we're still getting nervous about software companies again.
Well, I think that could be part of it. It could be people just uncertain about what's happening in the economy as a whole and just starting to take some marbles off the table and moving them around someplace else.
That could be too. I got a couple of tidbits involving Dollar Tree and the like that I wanted to share a little bit later on in this report. But yeah, it was. I was blaming it on software because overnight, Jensen Huang, the head of NVIDIA, basically put out a stop panicking statement saying, "Don't worry, AI is going to use that software just automatically, so you don't need to worry about it." And the Goldman Sachs economist said the software route was oversold, and when you get two voices that big, it's got to put a little bit more confidence in people's brains that maybe the software industry isn't going to die a painful death off of artificial intelligence, huh?
Well, yeah. I mean, it still could, but we'll see when.
It could.
How long it takes.
It could, but a couple of big heads were saying about it. The big number for today comes out. It was supposed to be here on Friday, but the government shut down and they all took a few days off. The fabled unemployment rate and the jobs creation number from last month. And boy, what a nice surprise. The White House last night was putting out statements saying, don't panic when you see the jobs numbers tomorrow. The economy's doing just fine. Don't worry about anything. And then we dang near doubled what they expected to get us, didn't they?
Yeah, more than doubled. I mean, the expectation was 55,000 new jobs. We got 130,000 new jobs. You got to say, Dave, ADP probably had it wrong this time in the direction.
Offhand, I think they did. Normally, directionally, ADP gives us a pretty good indication, and the ADP report last week was an unmitigated disaster. But yeah, 130,000 new jobs in the economy last month, plus the unemployment rate. That official number actually goes down from 4.4 to 4.3%. Hey, happy days are here again, right?
Well, according to this report, it looks like it, and that's January. So I mean, that's some better news. The markets, the indexes really loved it this morning. They all jumped as soon as that report hit the marketplace.
It was good to hear. And like I said, with all the talking down on the thing, I was fully expecting to hear an absolute disaster down the line, and we didn't get any of it. I was mentioning that the hinkiness of the economy. Generally, it's almost axiomatic that when Walmart has a good month, that indicates that somebody else in the economy is having a bad month. Dollar Tree, I'm looking for the number here. They had an increase. They reported some number like an extra few 100,000 new families showing up and buying at Dollar Tree. There we go. They showed a number of there we go. 3 million additional households visited Dollar Tree last year compared to the year prior, and 60% of their customers made at least $100,000 a year. That tends to indicate we're economizing a bit, and we are a little nervous about the economy, aren't we?
I think so. I mean, I think people are becoming more frugal, trying to make sure that the dollar they have, they get the most out of it. And that's just an indication of still the inflationary period we still seem to be in, because the things you and I need on a daily basis really haven't dropped much. At least it doesn't look like it to me.
Absolutely. And this weird part about it is the stuff that hasn't dropped much is the stuff you expect to. Things like food and energy. Okay, gas is cheaper than it was a year ago, but food really hasn't ratcheted downward like it normally is expected to. When the inflation rate starts leveling off, you expect the more volatile stuff. That's why they factor it out for the core numbers. It hasn't really gone down that much. I had a friend having an absolute hissy fit the other day over the price of bleach. I stocked up a few months ago and haven't had to buy it, but I understand it's gone through the roof lately.
What hasn't, right? I mean, it just seems like
Yeah.
everything keeps going up and up and up. So, yeah.
Yeah, that's the stuff that's supposed to generally ratchet downward because it's less stable in terms of prices, and the inflation rate is, well, it's not good, but at least it's more under control than it was a few years ago. But we haven't seen those volatile prices going back down yet, and that's costing the Trump administration some brownie points in public opinion polls too.
Yeah, and that he can't really afford that right now. We need, which hopefully this jobs report may help him out a little bit. But as this is election year, things have to really start to turn around quick before the election.
Oh, absolutely. We were joking before we went on the air about how we're going to hear press releases from both sides of the political fence. The Democrats are going to say, yeah, it's President Trump's hand-picked statistician, and the Trump administration will say, hey, happy days are here again. The economy's back to healthy again. And frankly, truth is probably between the two of those two places someplace, because I don't believe either side generally. It is earnings season, and before we quick threw you on the air, you mentioned that Mattel had reported. That's kind of a zero-sum game with Hasbro. How are the toy industry doing?
Man, it must not be doing very well, Dave. They missed substantially on their earnings and their revenue. Both came in well below expectations, as well as the adjustments they made for the future. Drastically different than what Citigroup and JP Morgan thought they were going to be coming, because they've downgraded the stock significantly. They're trading down 29.33% this morning.
Holy crud!
Yeah.
Now, that indicates two things in my mind. Step number one, they haven't gotten any new movie deals for backup toys from a movie lately. And number two, it probably means that when we hear from Hasbro, they're probably going to have a pretty good year.
Yeah, exactly. Yeah. It's like they're tale of two cities, right?
Yeah, those two are always a zero-sum game. Whoever gets the hot movie contract ends up having a good year, and that just indicates Mattel did not succeed in doing any good negotiating lately, doesn't it?
Yeah, exactly. So let's talk about Ford. Ford reported as well. They missed this last quarter by about 6 cents a share. They came in at 13 cents a share. The expectation was like 19 cents. They beat on revenue, but this is the first time they've had a loss in the last, since 2022, I believe. And it's the widest loss they've had in like 4 or 5 years. So, yeah, it's got, but I think Ford's still trading up, if I remember right. Yeah, they're trading up almost 0.9% this morning.
A chunk of that EV write-offs that seems to be endemic in the automotive industry lately.
So what they said was, it's not in this report, but I read it in another report, is that they were counting on some tariff credits to offset some of their parts cost. And what happened was it came in a lot later than anticipated. So they didn't get that $900 million of credit in the quarter they thought they were going to get it in. So that was the indication anyway.
That would explain why the stock price isn't suffering that much.
Exactly. So, man, I got a bunch of stocks today. Crazy.
Busy week.
It is a busy week. Let's talk about another one, Lyft, another drop this morning, as they reported their fourth quarter earnings. They beat on earnings. They came in as expected on revenue. I'm not sure where the disconnect is because they're trading down significantly. Oh, I see. A 17% drop in bookings. So
Oops.
that's not good for them. They're
Right.
down 15.5% this morning.
Whoa. Ride share is starting to become not zero sum, but it's maturing to the point where one of these companies that does a lot of that stuff is not going to survive.
Something's got to change in that
Yep.
process. I was trying to see if I had any good news this morning as we kind of head into the middle of the week, and it's hard to find, Dave. Even Zillow fell 5% this morning earlier. Even they missed by a penny a share. It looks like revenue was ahead of expectations. Let's see where they are right now, though. And right now they're down 6.1%.
Jeez.
Yeah, I'm having a hard time finding any good news, Dave. Let's see here. Yeah,
And you're
yeah.
normally so cheerful, Philip.
I know. It's like Gilead Science down 2%. Astera Labs plunged 12%. Moderna down 10%. I don't see a positive bunch, positive anywhere in this bunch, Dave, this morning.
Well, in that case, let's do some positives on the overalls because the unemployment report had to look good. It was a mixed bag yesterday. The 30 blue chips on the Dow gave us a gain, but everybody else was off by a little bit. 45 minutes before we opened this morning. What have you got for us?
Well, off those jobs reports, we did see a bump in the futures. The Dow's up 445 100. It's almost a 0.5%. S&P 500 is up 0.5%. The Nasdaq 100 up 0.7. Russell 2000 is up 0.9. So everything's got solid green right now before the open. On the other side of the coin, silver making a big jump again this morning, up 5% to $84.41 an ounce. Gold's back over 5,000. It's up 1.1% to $5,086. Unfortunately, that black gold is up as well. Crude oil is up 2.1% to $65.33 a barrel right now.
Well, poop. I'm looking over the funds, and I'm not seeing a lot of good news there. Asian Rim market does follow our overall broader market, so they were mixed overnight. One of the Chinese mainland indexes was off by 0.33%. Other one was up by that. So let's call it net flat in the Asian Rim this morning. Europe, on the other hand, is mixed but positive. We'll call it that. I got some ups, some downs, but the average European index is to the green side to the tune of about 0.25% halfway through their trading day. Got to get my retirement ready. Someday I'm going to do it, and I need to know I can afford to retire. How do I find you to get my plans in place?
Then give us a call at 863-382-0037. Schedule their core retirement design. It's 30 minutes, you and I on the phone, making sure that you've got everything in place for that retirement you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
All righty, and you and me back again tomorrow morning here to tell everybody what's going on up to the second. You have a good day, and I'll see you tomorrow.
All right, man, you too.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week's going well. I look forward to speaking to you again tomorrow, and we'll have more updates for you then. Until then, have a great day. Bye now.